be. And then finally, your feedback and active participation are highly encouraged at the end of the webinar. So just like the moderator said, please sit back and enjoy this training because you are gonna love it. So moving forward, we are going to be bringing on board our guest trainer without further ado, so we do not waste much time. We're about to delve into the training proper. So, but before I bring our trainer on board, I'm going to be sharing her profile for many of us that have not seen her profile, are yet to know our trainer. So I'm going to be sharing her profile so you have a background knowledge of who is coming on board to lecture us, who is coming on board to teach us. So one thing about VIV Finance Management Service is that we don't bring a mediocre trainer, or we don't bring an unprofessional trainer. We go extra mile to bring experts in that particular field or in that particular topic that VIV Finance is wanting to train finance professionals on. So even if you are a finance professional or a business owner, I believe this training on the new tax act will benefit you, because it doesn't just benefit the as we say it, like the employees, it also benefits the employers and the business owners. So I would quickly share my screen again so I can read through the trainer's profile. Yes. So great. So now our trainer's name is Joyce Obiako. So Joyce Obiako is a seasoned, sorry about that. Okay. So Joyce Obiako is a seasoned finance, tax and business advisory professional with over 10 years of experience spanning banking, audit, public sector tax administration, and multinational consulting. She began her career with First Bank, where she worked as a financial advisor before moving into an audit firm as a tax consultant, working closely with the LIRS, the Lagos State International Revenue Service, to bridge complex taxes and compliance issues for multi-companies across industries. Her career later expanded into advisory roles with local and multinational organizations, including companies operating in the United States and Canada, giving her a strong cross-border perspective on tax and financial management. Joyce Obiako is the founder of Midas Touch Analytics, a boutique business finance consulting firm where she works with small and medium-sized businesses to bring structure, clarity, and strategic insight into their financial systems and operations. Her work and an MBA candidate. So Joy brings a practical business-first approach to tax conversations grounded in real-world experience and focused on sustainable growth. I mean, this is so bogus. So please join me with a clapping emoji as we welcome our guest trainer as he takes the floor. Thank you all. Joyce, the floor is yours.
Hello, everyone. Good afternoon. So can you all hear me? Sorry, can you hear me? Okay, thank you for that. Thank you, Vivian, for hosting this free webinar for everyone, because I know people actually pay a lot to go for this kind of training. but here you are, giving it to the public for free. So thank you very much. And a big thank you to everyone that is joining this training. Thank you for taking the time out of your very, very busy schedules to just come and, listen to what we have to say. And I just want, yes, I know that the host said we shouldn't, interrupt when I'm speaking, but nevertheless, I want this session to be very, very interactive as possible. And we can always make use of the chat box and make use of the chat box and just chat. If there's any question you have, feel free to ask in the chat box, type in your questions, and then the host will always read it out, and then I can be able to answer it at the end of the session, because I will just be brief with my presentation, then I'll give enough room for us to actually ask our questions, because I know in programs like this, people usually have a lot of questions, especially with this new tax act. There's so many questions going on in the mind of the people. People are like, okay, what's this, what's that? So many questions that people don't have anyone to answer them. And so I'm here today to be able to answer whatever questions that we may be having. So without further ado, okay, kindly confirm that you can see my screen now. Can you see my screen? I can't see if you guys, maybe Vivian, you can make use of your audio. You can speak out, because I can't see my screen. So I just hope you guys can see my screen now. Vivian, you can see my screen, right?
I can see your screen, ma.
Okay, great. So we're looking at the Nigerian Tax Act and everything that has to do with Nigerian Tax Act, because a lot of people have been asking questions. Okay, what is this new tax act? How does it affect me as an individual? How does it affect me as a business owner? So this training is just trying to cover all of that. So first of all, the new tax act is like trying to put in together every kind of fragmented laws. Before now, we have different kind of laws. We have the PTT, we have the stamp duty, we have the VAT duty, we have a lot of taxes, different kind of taxes, and people don't really understand. So the NRA just came up with another method and said, okay, let's just unify this whole tax system. Let's just simplify it and be able so that people can be able to understand what it is. So it's a consolidation of multiple complex tax laws into one single legal framework to streamline administration. So trying to make administration to be very, very easy for the people. Now, what does this new NTA, what does it mean? When I talk about NTA, it means the Nigerian Tax Act. People say, okay, what is this Nigerian Tax Act? What is it all about? Now, it includes the expansion of the tax net to capture the informal sector, freelancers, digital creators, for greater equity and revenue for the government. Prior to now, a lot of people have been earning money online and they are not being taxed, like the digital creators, the freelancers, and not just them. We have a lot of international companies, foreign companies that they actually make money from Nigeria, but they are not being taxed. So Nigerian tax government tax authorities, they had to come together and they were like, oh, this is a problem. We are actually leaking money by not including these other people. For example, and we know Netflix make a lot of money from Nigeria, but they don't pay taxes. You can imagine how much billions of naira that these guys make off us, but Nigeria don't get anything. So the new tax act came in place to actually, one, help the masses, two, also to increase revenue for the government, because a lot of people came in and say, oh, the government wants to keep on taxing us and all of that. No, it's not about government wanting to tax you more, because if you look at this, the new tax act, actually, it increases the tax liabilities for low and medium income earners, but the high income earners, the tax liabilities were actually just increased with just a very, very little percentage. For everyone, it's actually a good thing. And another thing that this new tax act is all about is modernization and digitalization of transactions. Like before now, countries, if you want to send invoice to your customers, it's issued through the, for example, in US, it's issued to the IRS and all of that. So they have the board and the dashboard. So they'll just like enter the invoice through that portal. It's not like sorry, I think I'm just speaking too fast. Let me just slow down a bit. Invoices are not generated manually like we do here. It's automatic through the IRS portal. So now Nigeria too is also trying to bring that into our system by modernizing our invoicing system, tax system and all of that, because at the end of the year, some people say, oh, they made this amount of money, but actually they actually made more than that. So with this modernization, it's a shift towards digital first compliance, invoicing and automated administration. So with this now, people can no longer lie about what their income is. Like the host introduced me by virtue of a privilege, I was able to work with LIRS from 2018 to like 2022. So I was also a tax consultant with them, and we go for tax audits to different companies. Even for the federal government, I was able to be one of the external auditors for a federal government institution. So we have realized a lot of people, they lie about their data, their documents, their report. They say they make 5 million naira, whereas they made much more than that. So now with this modernization and digitalization of invoicing and all of that, all of that will be actually be taken care of. But we'll get to that furthermore into this presentation. Now, the impact on individuals. What are the reliefs? Okay, now we have what is called progressive tax bands. Like it's not just a flat rate, it's progressive. Like that is, the more you earn, the higher your taxes. So for minimum income earners, they are 0% tax. People that earn less than 800,000 naira annual taxable income, because people say, oh, if you make 800,000 naira in a month, they'll tax you in a year, rather, they'll tax you. No. There's what we call taxable income. What is taxable income? Taxable income is after you've deducted every expenses that you incurred in the process of, earning your income, whatever is wholly and exclusively to you earning your income. So after you've deducted all that, then you have what is called your taxable income. So even if you're earning maybe 100K in a month and in a year, your income is 1.2 million. By the time you deduct, maybe for PIT anyway, by the time you bring in the pension relief, you bring in the rent relief, if you pay NHIS, National House Insurance Scheme or NHF, all of that, it will actually reduce and your tax liability will come down to 0%. For example, I know a lot of companies who this January, they actually had an increased take-home pay. So what else do we have? What are the impact on individuals? We also have rent relief, 20% deduction on annual rent, which is capped at 500,000. What does that mean? If you're, maybe now, for example, now, your rent is 1 million naira, 20% of 1 million naira is actually 200,000. So no matter how much your rent is, the 20% must not pass 500,000. Let's say you're paying rent of 10 million naira. Your 20% of 10 million naira is actually 2 million naira. So, but the government only recognizes that you can only deduct 500,000 naira. So, because we are just saying 20%, 20%, no, it's not actually 20%. It's 20% capped at 500,000. So, if your rent is 10 million naira, definitely the 20% of 10 million naira is more than 500,000. So, you don't fall into that category, but the max that the relief gives you is 500,000. Income protection, minimum wage earners are fully exempted from personal income tax and reduced rates for earners under 20 million naira per annum. Like, okay, before now, if you earn 20 million naira, your taxes are actually higher than what it is now. So what are the impacts on individuals? That is the expansion. Now we now have what's called residency due. Now, what does it mean residency due? If you stay in the country for 6 months and above within 1 year period, you are deemed a resident. Because some people say, oh, I'm not 100, I'm not in Nigeria all over the year. But if you're in Nigeria at least 6 months, then you are deemed to be taxable. Now, global income, residents taxed on worldwide income. Foreign income tax that equivalent naira market rate, digital. So what does that mean? Resident tax on worldwide income. For example, we have a lot of people in Nigeria that are actually earning money from remote countries. Yes, of which I'm also one of those people. Like we earn from international companies. We work with international companies. Sorry, give me a minute, please. Just 1 minute, please. Okay, thank you. I'm back. So let me go back to sharing my screen. Okay. So resident tax on worldwide income, foreign income tax at equivalent naira market rate. So from the payroll template that I'll share with us later today, you will see where if you earn in foreign income, actually the payroll template was created for people that earn remote workers that earn from multinational companies, they earn in dollars, and they're like, oh, Joyce, how are we able to do this and all of that? So there's a rate you must be able to what is it called now? Is it convert to the equivalent market rate for naira? So now digital assets, disposal of cryptocurrency and digital assets is now explicitly taxable. Yes, a lot of people have been earning through cryptocurrency, bitcoins, and all of that, but like I said earlier on, they're not being taxed. So this new tax act is coming into looking into all of that. So if you buy crypto and you sell whatever profits that is on that, you actually pay taxes on it. Digital assets are also now taxable. So it's not like people have so much money in their bitcoins, like some people they convert all their money into bitcoins and all of that, and they make so much money, but they don't pay taxes on this thing. Other countries they've actually recognized Bitcoin as actually money, but some countries have not gotten up to that. So Nigeria is now coming and say, okay, this is actually a way we can actually have revenue. Informal sector presumptive tax applies to those with no records and revenue up to 12 million naira. Now, for those who are these the informal sectors, we know so many people that just have shops, they don't have maybe good recording system. Like Nigeria, one of the issues Nigeria have is a proper bookkeeping and accounting system. And if you're an accountant here, you agree with me that one of the problems we have in Nigeria as a whole is lack of accountability. For example, people who different stores, if you go to Alaba market, that is $1 million revenue generating platform, or so to say, business rather. So they make a lot of money, but there's no proper documentation of all these monies that they are making. So now the government now came in and said, okay, these ones are informal sectors. Like the formal sectors are like, corporate businesses. Of course, they have documentations. Of course, they have bookkeeping and accounting system whereby they know every money they make, they know what they spend. But there are others in the informal sectors, people that sell things around, they don't have record. So the government said that, okay, if you make up to 12 million naira per annum, which is 1 million naira per month, then we'll do what is called a presumptive tax for you. That is, okay, we'll just presume and say, okay, based on this is what your tax should be. Another thing we have on this new tax act is job loss threshold. Exemption on compensation has been increased to 50 million naira. Let's say you're working in a corporate company, before it was 10 million naira, and you lose your job. Normally if you gain compensation above 10 million naira, you pay tax on the excess, but now it has been increased to 50 million naira. So if it's more than 50 million naira, you pay tax on the excess of 50 million naira using the progressive band tax rate. So now, tax-free zone. Now, who is a small company? I know we all know all of these. Small company, if you earn 100 million, less than 100 million, then you are categorized as a small company. Say you are exempted from CIT. Small companies also don't pay VAT, and they don't also charge VAT, and they cannot be charged VAT. I know we're going to come to ask that question. So people say, okay, what if I'm dealing with a large company and they charge me VAT? How do I do that? We'll get to that. So now the profit rule. Before now, we have what is called minimum tax. You actually pay minimum tax. So that even if you made profit or not, you pay minimum tax. But now we don't pay minimum tax again. Minimum tax has been abolished, has been taken off. If you made loss, then no one is actually asking you to pay taxes. Now you can even carry over your losses. Yes, you can carry over your losses to the next accounting year, like bring it in and then reduce that losses from the next accounting year and then pay your tax from your taxable income. Yes. But if you have more questions on that, you can ask me now. What is the impact of the NT on large corporations? Okay, large corporations. Now, if you are above 100 million, they fall into a large company. You pay CIT rate of 30%, development levy, new flat rate of 4%, capital gains tax has been increased from 10% to 30%. You also pay VAT, and then you must register if. Like I said, non-registered residents must register if they actually have revenue exceeding 25 million naira. Now, let me speak on this. Like I said, when we started this presentation, I said the new tax act was trying to consolidate several different kind of laws into just 4. now we don't have all those. Before we had so many tax laws. We had education tax laws, we had PPT, we had that, we had this, we had so many. So now they unify them into 4, which is CIT, PIT, development levy, and capital gains tax. So CIT falls for company, PIT for individuals, and businesses that are not registered. For example, you have an enterprise, like so many of us, maybe we're running our own private accounting firm. For me, I just registered it under a business name, my company, Midas Stocks Analytics. So I don't pay, I don't fall under CIT assessment, I fall under PIT. Now, the company is one and the same with me. Yes, if you run maybe an enterprise and you're not an LLC, you're just a business name, the mode of tax is PIT. That is because in the eye of the law, it's like a business. It's just one and the same with the owner of the business. So you use the PIT mode of assessment. And then development levy. Now, development levy is used for 4% for large corporations. Small businesses don't pay development levy. Let's say you're a large company, you have over 100 million naira and above, you pay development levy of 4%. Now, what does that development levy, what is it used for? Good. It's used for to fund educational purposes. Like when we went for audit for a federal institution, so we had what we call, PET fund, education funds, and all of that. These are monies that we get from taxpayers to actually sponsor schools, universities. For example, if you're attending a federal university here, you will notice that your school fee is actually cheaper than normal maybe state universities or private universities. Why is that? Because taxpayers are actually offsetting the school fees. So that is what this development levy is actually for. Because what is 4% development levy? Is actually used for some of these things, some of these subsidized fees. That's why people can go to school because it's not as expensive. The government, but you know that lecturers are being paid. They have buildings, like they have equipment, they have laboratories, they have so many things. Where are they using the money from? It's from taxes. It's from taxpayers' money. So this is just to enlighten us to understand what all these things are for. So that's what this development levy is for. It does not apply to small companies. Now, capital gains tax. I know a lot of people have questions concerning capital gains tax. That's been increased from 10% to 30%. And what is capital gain tax? Any profit you make from disposal of assets, which is exceeding 1 year, not from the profits from disposal of assets. That is what is called capital gains tax. Let's say, okay, you bought this property, and most of the time when you buy these things, you offset it against your tax liabilities. But now the government is now saying, okay, you have these properties, maybe I bought this machine, I want to use it, then after 1 year and I sold it larger, like more than the amount that I bought it, whatever profits that I generated from that, if it is exceeding 10 million naira, because that's one thing we need to know. If the profits you made from your capital gain tax is exceeding 10 million naira, then you pay taxes on it. But if whatever profit you made is not exceeding that, so you don't fall into that, because people are saying, oh, if I sell my assets and all of that, I'm still going to pay 30% tax, but there's actually a threshold. There's a threshold. Digital economy, 7.5% on VAT. VAT is still the same 7.5% on all digital services, like I said. So now you're going to see that streaming, YouTube, Netflix is going to cost you more money, because now they will include 7.5% VAT on it. Now, we also, under the new tax act, we also have what is it called? Exempt and zero-rated taxes. Now, what do we mean? Now, food items are actually 0%. You don't pay taxes on food stores, basic essential needs such as food stores, educational materials, healthcare products, agricultural equipment. They're actually tax exempted. For example, I was in an office one day, and then somebody was going to buy, food items, for refreshment of the guests for the events we're having, and then the person included VAT in it. And I replied and said, no, food items are actually VAT exempted. So you must understand as an accountant, because now with this new government, people are just adding taxes to everything. You need to understand that not everything is actually VATable. We have VATable goods and services, yes, and we have other services that are not VATable. Like, for example, there are up to 50 actually. I will share the 50 list with us at the end of this presentation, so that you can be aware of what you don't actually pay VAT on. Like educational materials too is actually 0% VAT. Let's say you're buying educational products, textbooks, anything education, it's actually, you don't pay VAT on it. You also don't they also don't withhold from you. So anything like, that withholding tax also don't apply to it. Now I just remember something and I need to bring it in. For professional services, when we talk about small companies, professional services or consulting firms are not included. What does that mean? Professional consulting firms will pay VAT, even if you don't make up to 100 million and you pay VAT. So they are exempted from the small companies. So what are those are taxable? Digital services are taxable, cross-border services by non-residents, input VAT recovery. Now we have new mechanism allowing businesses to claim input VAT on taxable goods, services, and assets. Now, what does this mean? Input VAT. Let's say you are charged VAT on your system. Let's say I bought this laptop for 1 million naira. It's actually VATable, and they include the 7.5% VAT on it and all of that. I can now use the VAT. I can now claim it. As long as the VAT was included in a taxable goods and services, you can now actually claim it off against your final tax liability. Before now, businesses lose a lot of money on VAT. Like, somebody gives me an invoice of 1 million naira and then the person includes 7.5%. You see, it's a lot. But now the government is now saying that there's now input VAT recovery. Just like the way it works, there's no input VAT recovery. So I can now actually, reclaim this VAT against my tax liabilities. Now, withholding taxes. What are withholding taxes? So before maybe I come to withholding taxes, let me actually explain what VAT taxes. VAT are taxes you actually pay on taxable goods consumptions. Like, okay, I bought this, anything that is, VATable, like, in my head, I'm just trying to think of things that apply. Every other thing that does not fall within these 50 items are actually what you actually pay VAT on. Let's say I want to buy this furniture, I actually pay VAT on it. I want to buy my laptop, I pay VAT on it. I want to buy whatever, in the course of running my businesses, I need this person to supply these raw materials for me and all of that. I pay VAT on it and all of that. But withholding tax is a kind of tax that is an advance payment on your tax liability. So you can use withholding tax to offset your final tax credits. Withholding tax is like a tax credit. For example, I'm buying this furniture. Let's say I'm the one selling this furniture now. I include the 7.5% VAT on it and I give to the person and then they pay me. I think I have a video of that on my YouTube channel. Then they add they withhold 5% on the amount, not the full amount. For example, let me get practical here. Let's say I'm selling this furniture for like maybe 100,000 naira, and I include 7.5% of VAT on it. Now, 7.5% of 100,000 naira is actually how much? I think that is 7,500. So the total amount I will now give that person will be 100,175. Sorry, I'm going to be calling a lot of figures. 100,000 and 107. I don't want to say 175,000 because I know that is wrong. Well, 100,000. I'm sorry. 75. I don't know how to pronounce 100 and. If you can help me out here.
107,500.
Thank you. 107,500. Because I know I'll be saying 175,000. I wanted to use 1 million because I know I'll be calling big money. I will not be able to call 77. See, let me just say 1 million so that I don't get. Let's say I sold this furniture for 1 million naira, then I include a VAT of 7.5%. So the VAT of 7.5% of 1 million naira, 75,000. I think that's correct. Yes. So now the total invoice I'll give to that person will be 1,075,000. Now that person will not charge me maybe 5% withholding tax on 1 million naira, not 1,075,000 naira. They'll charge me withholding tax of 5% on 1 million naira. So 5% of 1 million naira, I know off my head that should be 50,000 naira. So now they will now withhold 50,000 naira and now give me 950 plus 75,000 naira. So if you add 950 plus 75,000, I think that should be 1,025,000 naira. I think that would be correct. If it's big amounts, my brain will calculate it fast. So that would be 1,025,000 naira. So that's what I will now receive. So the person has withheld that 50,000 naira for me to use as against my final income tax liability. So now if somebody is withholding taxes from you, they should ask for your TIN, that is your tax identification number. Now, this new taxes said everybody must have a tax identification number. Every taxable person must have a tax identification number. So if someone is trying to say, oh, we are deducting withholding tax from you, the money that we're going to pay you, and they didn't ask you for your TIN, the person is actually trying to scam you. So they should ask for your TIN. So they use your TIN to actually remit that taxes for you. Now, when it comes to small businesses, small businesses, you're not supposed to charge me tax, because under the new tax act now, small businesses are actually exempted from it. So if as a small business, I cannot withhold taxes, and I also cannot charge tax. But for adventure, you're dealing with a bigger company, they are mandated to charge withholding tax. So what do? You use it to offset. Now, you say at the end of the year, you don't pay your income tax, right? Your company tax, but you can actually use it to offset your income tax. But we'll come to that when we come to that aspect during our question and answers. We'll come to that. So you use it to, as a company, even though you're not paying CIT as a small, but you still have to pay what is called PIT. For example, now you have a business, you don't earn up to, your revenue is not up to 100 million naira per annum. You are still going to pay PIT. Yes, you're still going to pay PIT, like for yourself, like in your pay, your personal income tax, because you pay yourself salary now, definitely now. You pay 1 or 2 persons that are working with you salaries. So you can actually use that withholding tax to actually offset your annual PIT. Am I communicating? Is that well understood? So now withholding taxes now, it applies to rent, interest, dividends, 10%. For example, now if you are investing money with maybe all these investment banks, maybe PiggyVest, Bamboo, or whatever investment platform you use here, you'd have gotten a memo from them that, oh, because of the new tax act, we're going to be withholding 10% on your interest. Let's say you invested 1 million naira with PiggyVest, and at the end of 1 year, maybe you've gotten like 50,000 naira interest on it. They'll withhold 10% of 50,000 naira, not your capital, 10% of 50,000 naira, which is 5,000 naira. Then they'll give that to you. Consultancy commission, let's say as a consultancy firm or whatever, then the withholding tax will be 5%. Now, I think that's correct. So we have dealt with company income tax, small company less than 100, and large company larger than 100 million per annum. So now let's look into payee and the modern day payroll. Now, one of the things we have to do under this new tax act is to update your automated payroll systems to reflect new reliefs. That is, you have to have the automated payroll template. The payroll you used for last year cannot be the same that you'll be using this year. So how do you do it now? You have your gross pay. From your gross pay, you deduct, so you bring in all the statutory deductions and reliefs, let's say pension. We'll get into that. I will share my payroll template with you. So that is where this will actually come in. So your pension, your NHIS, your NHF, your rent relief, you have to deduct all of that, and then you now come to what you call your taxable income. Then from your taxable income, then you now pay your you now determine what your payee would be. So you apply your new progressive tax, then your net pay should have increased. So under this new tax act, you should have an increased take home for many. Now, business names, non-liability, they fall under personal income tax. Like I've said, if you're just a business name, you're not a non-liability, you fall under personal income tax. Now, the digital mandate, technology requirements. First of all, there's the mandatory tax certification number for everyone. Now, the new tax act has said, now FIRS is no longer called FIRS, they're now called NRS. Why? Nigerian Revenue Service. Because people think, oh, the taxes they pay is just for the federal government, but no, it's actually for the whole country. So that's why they say it is Nigerian Revenue Service. So when you're paying your VAT, you're remitting your VAT to FIRS, then you might just feel like you're giving it to the federal government. Because when I worked with, when I was an external auditor for one of the federal government institutions, that was when I saw that federal government actually allocates money. They have an amount they allocate to state government and local government, but the citizens don't know. And at the end of the day, we all say, oh, federal government is not doing anything. Federal government is not. No, the federal government are actually doing something. And that was during the Buhari regime. You can see also during the Buhari regime when we had this COVID lockdown, palliatives were hidden, they didn't refuse to share it because people don't know their right. Now you need to understand that if something is not working in your locality, if something is not working in your state, you hold your local government chairman responsible. You hold your state government responsible, not just the federal government. Because Nigeria, I think we just operate a federal government system. No, it's actually a nationwide. That's why it was changed to Nigerian Revenue Service, so that you will know that this tax I'm paying, this VAT I'm paying, I'm not just giving it to federal government. alone. I'm also giving it to my local government. I'm also giving it to my state government through the federal government. Is that, please, I want us to make use of the chat box. Please, if you're understanding, please put it in the chat box. If you don't understand, say, can you repeat yourself? Please, it's very, very important. Let's make use of the chat box to actually show that we're actually flowing. So mandatory tax identification number for all, upgrade to ERP supporting invoicing and real-time reporting. Now, this digitalization and modernization of invoicing system is actually here to stay. And that is another that we'll be actually looking into later in the future, because people need to understand that you need to now digitize your VAT, your invoice and all of that. This way that you just, maybe if you're using an accounting software, maybe QuickBooks, you use your QuickBooks to generate invoice and just give to your customer. It no longer applies again. You have to use a digital portal, and one of which I had a meeting with one of them earlier today. I think she should be on this call, Digitax, so you can actually implement them. So they have this MBS, that is what is it called, this that, and so it's linked to NRS, that is Nigeria Revenue Service, actually to them. So you have to send an invoice through that digital portal. So once you issue, like when she was doing the demo with me earlier today, so you actually enter the invoice through the system and all of that, and then you send. Once you click send, it goes to NRS. Then NRS will now send it to the customer. So that is the era we are in now. So this issue of just sending invoices through manual method is actually over. Now we are now into digitalization of invoicing, that is called e-invoicing. So everyone needs to upgrade to that ERP that supports invoicing and real-time reporting. So yes, ERP, that is, and this digital, there's a way they actually can integrate it into your accounting software. Let's say you're using QuickBooks, you're using NetSuite, you're using Odoo, you're using Zoho Books. They have a way to integrate it with your accounting software. So once you just enter it like that, NRS will get it, NRS will send to the person. But if this person already uses a digitized method of issuing invoices, they receive it immediately. You're entering it and sending it to NRS. They receive it immediately. So like this, now NRS already have like a view of every transaction that is taking place in your organization. So now companies are now being mandated to upgrade into ERP supporting platforms. So invoicing will now be digital. VAT compliance invoices must contain things. So every of your invoice must contain your tax identification numbers. Now we have what is called the bank triggers. That is, banks are, I think I saw one of my banker friend on this call. Shout out to you. Thank you for joining. So banks are now mandated to report quarterly flows exceeding 25 million naira for individuals. They are now mandated to report to the NRS, and for companies 100 million naira. If you have inflow, outflow that exceed this amount, the bank are now mandated to actually report and say, okay, this person, because now we are talking of 100 million per annum, you are now a small company. So if you are doing 25 million per quarter, you should see that by the end of the year, you should exceed that 100 million. Now, you as a company, now if you're doing 100 million per quarter, you should know that you're no longer a small company. So now it's not like people say banks are now mandated. Fine, not everyone that comes into use for your business, but at least there's a trigger report now that goes to NRS. Once in your account, you have inflow and outflow exceeding this amounts, as we saw here. Compliances and best practices under the New Tax Act. Record keeping: you must maintain financial records and bank statements for at least 6 years. Ensure that you have financial records. You must be very, very meticulous with this. You must ensure that you maintain financial records. Why? Why I also worked as an external auditor, we want to see, like, okay, your financial record for the past 5 years. We want to actually see the progression of your audited report. We want to actually see how you're actually progressing as a company and all that. You cannot just tell us that, oh, we just want to, we know what we look at when we come to look at all this. So you must have maintain financial records and bank statements for at least 6 years. Internal control: conduct periodic internal audit to fix discrepancies before official tax duties. So now you must have what is called internal audit. That's why I see a lot of companies now looking for internal control officers, because now before tax auditors come, you must have these internal controls within you to ensure that you're actually compliant with what is going on. Ensure that you are now using a digitalized method for your invoices, invoices and VAT and everything you're doing. Ensure that everything you're now up to date. Ensure that your record is up to date and all of that. Now we also have what is called the Office of the Tax Ombudsman, which is for free resolution of disputes. Before now, if you have any issue with the tax authorities, you have to go and defend yourself. Nobody, you have to pay. But now you have to make use of the Office of the Tax Ombudsman. So what does this mean? A tax ombudsman will represent you, like, oh, they come, they are like the mediators between you and taxpayers and the tax authorities. They look into the issue. You say, yeah, no, these people are saying I should pay 5 million naira. I did not make up to that though. Like, my tax should be 1 million naira. So the tax ombudsman will look at your record and say, okay, no, from this record, actually, this person is not supposed to pay on this amount. So because then we do what is called best of judgment. You might just give you and say, okay, based on you don't want to pay your tax, we just go what's called based on judgment, best of judgment. Oh, this is what you should pay. And you cannot even dispute that. So you have to now go to tax authorities to start begging them, bribing them, and all of that. But now with the Office of the Tax Ombudsman, you can actually go there for free. They represent you for free. And maintain a tax register, a dedicated register to track and manage all your tax liabilities. So this is not the era whereby people are now careless. Now, this is the era of structure. If you're a business owner, you must have a structure. Like, okay, your tax registers for everything regarding your taxes, VAT, withholding tax, company income tax, every tax that you pay, you must have a register for it and know that, oh, as at this time, I'm supposed to, pay my tax. Also, you should have your filing calendar. I think I once shared that on my LinkedIn. I was like, oh, you should have your filing calendar for payee. Your remittances is 10th of every month, VAT filing at 21st of every month to NIRS via Tax Pro Max. Annually, you have what's called the PIT filing. Yes, even though you are paying payee, as an individual, you have to go and file for your PIT. And the date is 31st of March. That, okay, from all the records, because you should actually ask for your tax receipt from your accountant. And, in other countries, they actually will send your payee receipt to you. You will see it and say, okay, the pay. So at the end of the year, you now use all of that to do your PIT filing on or before 31st of March. If there's anyone that I'm missing, just let me know. Annual for company, at least no more than 6 months after the end of your accounting calendar year. I will know that most companies, their accounting calendar year ends in 31st of December. So before, like, June 30th, you should have done what is called your company income tax. That is your audited financial statement. From there, you determine what your CIT is, and you have to file your CIT. Now everything is now being done, digitally. So what are the summary of these key changes? I'm really trying to hope I'm not still within my time. Like we all know, 800K tax-free allowance for individuals, 30% new capital gains tax, 100 small company, 4%. I think we've actually dealt with all of this, so we already know all of this. So now we are now navigating the future of finance. So it's now everything is now digitalized. The Nigerian Tax Act 2025 represents a shift towards transparency and digitalization. So ensure your systems are ready. Actually, that's what they said, like before January 1st, but we know some people have not still implemented this digitalization of invoicing and VAT. So yes, this presentation is a simplified guide. Yes, like not when it comes to this, it's not like, oh, So now let me quickly share my payroll. Let me quickly share my payroll template that okay, I think I've stopped sharing. Still sharing. So let me just quickly grab my payroll templates and just show us that. So like I said, if you have any question, please, I'm not seeing any question in the chat box, just notify. So at the end of the year, at the end of the presentation, you can just look into that, Windows, yeah. Okay. So now this is a payroll template that I created. I have two. I'll show you guys this one, then I'll show you the second one. So you can see this payroll is just, these are not real names, these are not real figures, just trying to create a template. So you have what is called the annual gross, the payroll gross. Now, under this template, I created what is called the benefit in kind untaxed. Meals, lunch, untaxed. Medicals are actually untaxed. Education reimbursement, lunch reimbursement, medical reimbursement, education reimbursement. It actually falls under the untaxed section of your payee of your payroll template. So you can see we have the basic, the housing, the transport, the sub. So each of these have like, you know, the formula for it. So it's not just like, okay, you know, like if you look at this annual payee, you can see there's a logic formula. If you look at the formula by here, you can see there's a logic sequence that it must follow. Now, if you are very good in Excel, you see that this follows the if logic, that okay, because we are now using the tax band to actually be able to, you know, determine what should come to that. I think I should share that with us. Let me share the main. Okay, the one that has every of it. Okay. I just hope I was not speaking too fast because I've been told that sometimes I talk fast. Sorry. Trying to. Hmm. Sorry. Okay. It's just too long. Hmm. It's not coming. I'm trying to share. But you saw, sorry, can anybody hear me? You saw when I shared the other payroll template. So I don't know why it's trying to show me something else, but I'm not download. I'm not sharing this one. So let me just close this one down so you can show me what I want to see. Okay, here we are. Okay, can you see my screen now? The payroll. Can you see this payroll sheet?
Yes, we can.
Okay, thank you. So now, if you look at this, I think this is confusing. Okay, now this is what I created. For example, now let me come to this tax breakdown. So now, like I said, for remote workers, like this for one I create for my client. So let's just say we are using 1 4. So just enter the person name here, description, what industry, how much are you earning in a month, say $4,000. Now use exchange rate of 1 4, which will give you if you do 4,000 times 1 4, $4,000 and 1 4, you get 5.6 million per month, and in a year that's 67 million. So all this, you can see the tax band, the progressive tax band, and what are the allowable deductions, the pension, the NHF, the NHIS, rent relief, life insurance. But now you now come to the tax computation. Now this is where the whole math and the whole breakdown is, and this is where you know if actually what the person is sharing with you is, if what the person is sharing is actually correct. So now you can see, so when you look into this, it's actually linked. It's a payroll. It's actually a template. So it's actually linked. So now, how do you know if this is correct? Now, when you look at now, this is what is annual. Let me just color this. Let me use blue. No. This is what I need to color. Okay, so when you look at this annual pay now, you can see that it's giving you 9,066,992 naira. So when you come now, look at the progressive tax rate application now. So by the time you sum all of this together, if you look down at my sum here, what are you seeing? You can see that it is 9,066,992. That is to let you know that this is correct. Now you can see I did a summation. Just be looking at it. When as I'm just entering the cell, just be looking at the formula by. So you can see that this is correct. And I also did a check method, because how do you know that this template is actually correct? Because anybody can come up and say, okay, yeah, my template is correct, but in maths, you have what is called, you have to take it backward, and you must get what you actually started with. Now let's look at the breakdown of this payroll schedule. Now this person now is annual income is 67,200,000 naira, which means in a month, what did we have here? Which means 5.6 million naira. So if you look at this payroll schedule now, you can see payroll gross, monthly gross, the basic, housing, transport, then you have what is called the sub-monthly. Now, I did not use the total 100% for the monthly gross. If you look at this monthly gross now, I'm now teaching us how to now prepare payroll. You see now we've left NRS now, NTA, we're not doing payroll, how to prepare payroll now. So if you look at this now, you can see that this is actually not the 5.6 that we saw. That's because I used 77. So if you look at this now, it's giving me like D4 divided by 12. But before then, there's a formula that I used there. So when you click on this, you can see there's something here, D1. I actually locked it. When you look at this, I actually made it so that you will not see it. This is 77%. I use 77% for the payroll gross. Why? Because I want to put 23% under untaxed benefits in kind, because it actually helps the employees and all of that. Like, okay, some employers will say, oh, we have benefits in kind that we reimburse them for lunch, for medicals, for education, because some companies really want you to take your professional development seriously. So now using that 77%, now you get your monthly gross of this, then you have your basic, housing, transport, you have your sub-monthly. So you have the employer's annual rent. So for this person now, his annual rent is 5 million naira per annum. So now you have the annual pension, which is 8% off. So once you just look at it, M4 times 12. So this is M4. What is M4? You can see 8% of summation F4 into H4, which is 8% of the basic, housing and transport. That is how you get your pension. Then you have the NHF, you have the NHIS, life insurance. Now I did 2 here. So now once you come down here, you now have what you call check. So this check now is to check to ensure that whatever formulas we've entered here from column A to column AA is actually correct. So you can see now that it has actually given us the monthly gross income of that person. So you can see it will add up. What is it adding? It's adding up the total net, because now you now come here, you now see where's the total net? V4. So this is total net before you now include your benefit in kind. Like we said, benefit in kind is untaxed. Yes, you can put me in with that. The untaxed one, not all benefits in kind are untaxed. There are benefits in kind that are taxed. For example, let's say your employer gives you, or they give you a car, it will be taxed 5%. Maybe they paid house rent for you, it will be taxed and all of that. So you need to understand. That's why I wrote it here, untaxed. So this benefit in kind is actually the untaxed one. So like you all know, medical is on tax, education on tax, food is actually on tax. So that is why you see it's under the BI untaxed BIK. Then you now have, when by the time you now include the monthly, the total net was BIK. You see this was, so you now do a check. You now add what is the check? Now did you get that? You add the total net, then your pension and your tax. It must give you what the gross income is. That is, after I've deducted this. Now I'm not trying to add everything back. If it doesn't give you that, then it means it's wrong. So now I have 2 kinds of no, I now did the second one without NHF and NHIS and life insurance, because not all companies actually pay NHF, like the other template I shared with us. Now I have 2 templates here. This one, I don't know. Okay, you guys cannot see this one. I'm not sharing my whole screen, so you cannot see it. So let me just go back to this. So the other one that I shared initially, it was not inclusive of NHF, NHIs, and life insurance, because when I did that one, I did it for a company that they were not run, because you have to ask. That's why I said, it's, when it comes to payroll, it's not one size fits all. Yes, there's a way you can actually modernize and streamline it to ensure that, okay, it actually benefits your client. Not every company pay for NHF, NHIS and all of that, but pension is actually statutory. So yes, your company should pay that. So now if you now look at, I want us to see something here. Now this one that is without NHF and NHIS, you can see that the monthly payee is more than this one, because this one now you've deducted NHF, NHIS, your taxable income is now less, because after you've deducted all these statutory deductions and reliefs, the taxable income is now lesser. But this one now, we did not put in NHF, NHIS, life insurance premium and all of that. So you can see that the annual taxable income was increased. So which means now this person is paying an increased monthly pay. So this person is now paying 813,000 naira for monthly taxes. Somebody will say, no, I want the one with NHF and NHIF, but just wait first. There's a clause there. So now by the time you look at the total net, this person is actually going on more. Yes, because now there's no NH. Because now if you want to deduct NHF, NHIS, it's actually from your gross, remember. So that means at the end of the month, you're actually going with less. So, but if you're not paying all of that, you actually pay more tax, but you go home with more. So there are two types. So whatever works for the company, or whatever the company is already putting in place, then that is what the company will go with. So I think this is where I come to the end of my presentation. Thank you all very much for your time. Thank you. So I'm open to questions So I can see a question here. So I think let me just read. Every place. So Emeka Nomadu said, every place you enter now charges VAT on whatever you consume. You are saying we should collect their thing in order to get back our funds. Okay, that's a good question. I'm not saying that. Definitely, I'm not saying now everywhere you go there is not everything that has VAT. That's why I was trying to let us understand that there are items that are not VATable. If you go and buy basic consumption like food items, they should not charge you VAT on that. Now I have 50 lists there. Let me see if I can open that and quickly share with us. I actually have 50 items that are untaxed. Let me just answer your question, then I'll show us that so we can see. I think I have that in, I don't know if it's an Excel or something. Okay, I'll show you that. So now when you see, if you fall under this category, anybody that charges you VAT, say, no, I'm not supposed to pay VAT on this item. Because Nigeria always try to, if you don't know the law, they would actually play smart game on you. So you are saying we should collect their thing in order to get back our funds. No, I'm not saying you should collect their thing. If somebody is charging you withholding tax, that's what they call withholding tax. Like now, Mr. Emeka, let's say you're a supplier and you supply goods, or let me put it this way now. Someone is actually buying materials from you. Let's say you supply them materials, and those materials you're actually supplying, they're actually VATable. You have to include your VAT. You have to include your VAT. I don't know if I should maybe show my face or something like that. I thought I was going to use my video. You have to include your VAT in that invoice that you'll be issuing to them. So definitely on your invoice, you should have your tax identification number. So you issue it to them. So them on the other hand, they will now withhold. They withhold from your income. Withholding tax is applied on your income, but VAT is applied on your consumables, on your purchases. But withholding is on your income. Now, let's say you now increase 7.5% VAT and then give to the person. The person will now withhold 5%. So from that 5%, person is withholding. The person is now supposed to collect your thing to remit on your behalf. That withholding tax that the person is collecting is to remit it, is an advance payment on your income. So it's on your tax liability. So the person is not to use it. It's a deduction from your income. It's deducted at source. Like, I want to pay you money. For example, now I have a company. I deal with contractors. And from before I pay my contractors, I have to be told 5%. So let's say I'm dealing with a contractor and what I'm supposed to pay them is 500,000 naira. I have to be told 5%. 5% of 500,000 naira is 25,000 naira. I have to be told it. And I'll ask them for their thing. And I will use their thing to go and pay that 25,000 naira to NRS. And I will share the withholding tax receipt with them. Because if somebody deducts withholding tax from you, you have to ask for your withholding tax receipt, because that is what you use to offset your tax liability at the end of the year. If you don't get your withholding tax receipt, what will you use to defend that that tax was actually deducted from you? So no, the VAT that they actually deducted from you, they don't have to ask for your thing. So what you now do now in this case, that is where I think you're asking about the input VAT. The VAT that was charged from you, you will now, you can use it to offset your own taxes. As long as it's on a taxable supply, you now use it to offset your tax at the end of the period and all of that. So it's just something that the government just introduced, input VAT. Say you now use it to offset tax. Maybe there's a tax you're supposed to pay, you now deduct whatever they've charged you, you now deduct it. I don't know if that is clear. Mr. Emeka, if you are not clear, just indicate it. Now, somebody said, please, for a company's VAT filing, do you file for both unpaid and paid purchases invoice received in each month? Companies VAT fine, do you file for both unpaid and paid purchases? No, you only file for what you've received payment for. If you've not received any payment, there are some companies in a month they did not make any sales. You have to file your new VAT, like you just file new. It is new. So yeah, so if you have issued an invoice and they've not paid you, what are you? No, you don't pay. You don't file on what you've not been paid on. Whenever they now pay you the money, because we'll see when the income came in and all of that. So that is when you now pay. Let's say now I sent somebody an invoice since 20th of January, the person did not pay, and I'm supposed to pay 5 for January VAT before 21st of February. Let's say the person now paid me today, being 13th of February. I'm not going to file it this month, though. I'll file it next month, because whatever you are filing this month is for last month's income. So what the income for this month is not what you file next month. Amara, I don't know if you are here, if you've gotten the answer to your question. Moving from business name to registered as a limited company, what are requirements and the tax implications? Good. You know, when people are, Mr. Ayomide, I know this Ayomide. This person is asking me this question. He's a chartered accountant. He's a chartered accountant and he works for a federal government institution. So you can see that people on this call, and they're actually people that they're actually, let me say, people that are actually very, very advanced. He's a chartered accountant, so maybe you're just trying to test my knowledge. Okay, Mr. Ayomide, nice having you on this call. Moving from business name to register as a limited liability, what are the requirements and tax implications? I worked with you when at that Federal Polytechnic at Ekiti. So, okay, what are the tax implications? Now you must understand that because they say, oh, small company no longer pay, if you're 100 million less, you're a small company, you don't pay CIT. I said it that because you don't pay CIT does not mean that you will not pay PIT. As a business name that you are running, you and your business, you are seen as one and the same person. Your company is not going, your business is not going to pay a separate tax, and then you pay a separate tax. Whatever tax that you are paying, it's the government, the tax authority see that it is your business that is paying. You and your business, you are one and the same. You only pay one tax, which is the PIT, and you use this progressive tax band for that. Let's say you are making, at the end of the year, you make 10 million naira. You can see from that payroll template I shared with you, the one I showed you that, okay, the summation of the tax band, because that is a computation, that is a calculation. At the end, you should see it that, okay, this is what your tax is. And then you pay on that. So when you pay on it, you pay on the name on your business. It's the same thing that it is you that pay. Because during the last webinar we had with the chairman of the fiscal committee, this was what he said. He told him that, no, if you're a business name, you don't have to pay separately from your business. You and your business, you pay one PIT. So now if you say you want to move to a limited liability company, and you can move. There are people that undo that, maybe lawyers and all of that. You tell them, but you should understand the implication of, you know, LLC. We call it LLC, limited liability company. Now understand that as a limited liability company, you have to, you know, do your annual audit. You have to do your also submit your audited financial statement with CAC at the end of the year. You have to do your pay your VAT to federal NRS. Now in this case, you also pay your PIT, because now you're also filing for your company and for yourself, because people must understand this. And even though you are an individual, you also have the tax ID that you can use to issue invoice. So if you now say what are the tax implications, the tax implication now of moving from a business name to a LLC means now your company will now, if you still pay PIT for yourself, you still pay. If you now fall under CIT, when you now exceed the 100 million, you now still pay CIT. But if you don't exceed the 100 million, you don't pay. But remember that you still pay PIT. So people need to understand that jumping into LLC does not solve your problem. Instead, I must understand what it means to have an LLC. Kindly share this payroll sheet with us here, or the WhatsApp group. Yes, like I said, I have two types of the payroll template here. The one that doesn't have the NHIS, the first one I shared with us, I can give us that. But the other one actually comes with just a token. I just hope there's somebody that is not on this call. I actually sold it to him for 150,000. Yes, I sold it to my client for 150. In fact, the first client I had was from oil and gas. I actually sold it to the person. Just so the person is on this call. I just sold the person for like more than that. Why? Because okay, this is my intellectual property. you know, and all of that. So I have to put a price on it, and you know, for people to actually understand that okay, this is actually coming from a professional that actually knows what she's doing. You can see the check method and all of that. So that one just comes with a very, very cheap token, because I had to work with the host, and I said the minimum I can do is 50K. She was like, please, people don't have 50K. I said okay, it's 50K, but at the end of the day, we were like, okay, let's just give them 20K. And she still said, no, ma, please, 20K. And I was like, okay, fine. The least I can do is 15,000. So if you have 15,000, you get a full payroll template. And what you also get in addition to that, you have a 1 week follow-up with me. Like I said, it's streamlined for your business, and you know, it's not just like one size fits all. Some companies, they don't pay NHF, NHIS, and all of that. But the other one that does not include NHF, NHIS, I can share with you. That one is for free. But the other one that you can see that is like 3 different sheets. You have the task computation, the task calculation, and all of that. You can see that one has a very, very detailed breakdown. That's one I'm just sending for a token of 15,000. And you don't just get that, you also get a video on how you can file for your VAT on tax formats. I have a video on that. Maybe I can share it with us here, or I think that is just exclusively for those that pay for that payroll sheet. And in addition to that, you also get the 50 items that are actually tax exempted, and you know, they are actually VAT exempted. I mean, you don't pay VAT on them and you don't pay tax. So they have 50 lists of items that, so you need to understand as an accountant. So if somebody is charging you VAT, you can say, no, in the law, this is not there. So if you don't have an idea, so when you pay for that, just 15,000 naira for that comprehensive payroll template, you get a video on how to file your VAT on tax formats. You also get the sheet containing the 50 and zero tax and exemptions. So now let me see the next question. Please, I want to ask a question on VAT. If I have a company, say we have a turnover of 50 million naira, I like big amounts like this, my brain will pick it up very fast, which is the total contract sum with withholding to be deducted, on what will I charge VAT? Okay, fine, good question. You have I want to if I would say a turnover of 50, when you say 50 million, which is total, let's say you have a contract, maybe the contract, of course, this kind of contract then is actually VATable. Now the VAT on 50 million naira is actually 7.5%. So what is 7.5% of 50 million naira? So that should be just hold on. Is that okay? Let me see. Is that 3.5 million? Because I know 5% of that should be 5 million. Should be 10% of that should be 5 million. So let me just quickly do math. 7.5%, 50 million. Yes, 3.750,000 now. That is the VAT. So now you now give yes, you have to charge VAT of 7.5 million, so 7.5%. So by the time you now add 3.3,750,000 to 50 million naira, so it will now be 53,750,000 naira. So depending on what this thing is, though, so the withholding tax can now be 10%. So if the person is now withholding 10% of 50 million naira, that is 5 million naira. So the person will now pay you 50 million minus 5 million naira is how much? Is that 45 million? So the person will now pay you 45 million plus 3,750,000 naira, which will now be 48,750,000 naira. So that 5 million naira now that person withheld from you, the person you ask to ask for your team, and the person will now use it to offset your tax liability. Or let's say even if the person is withholding 5% of that, 5% of 50 million naira should be 2.5 million naira. So you have to ask, the person will have to ask for your team and remit it on your behalf, and you have to collect the withholding tax receipt. So now at the end of the year, if you can do one contract for 50 million naira, that means at the end of the year, you should be able to make more than that. You should be able to exceed the 100 million naira, tax liability. Then at the end of the year, you now, tax threshold rather, you should not be able to now use that maybe 2.5 million to offset what your annual tax liability would be. Now, Timileyin Oyebamiji said, regarding VAT and withholding tax, I learned there's a specific threshold a business or small company must cross before they start charging VAT and withholding tax. Kindly shed more light on this. Yes, if you're a small company, you are still under the 100 million naira threshold. You're still under the 100 million naira threshold. So you don't charge VAT and they don't charge you VAT. But in case you're not dealing with a larger company that is now charging you VAT, remember, like I said, if I'm running a business now, I have PIT to pay at the end of the year. You pay your PIT at the end of the year. So I will not pay it on a monthly basis. Payee is not PIT. Payee is just a system that is just a mechanized system under PIT. Payee is for employees. As an employer, as a business owner now, I'm not under that payee. That one I'm showing you a payroll structure. I'm not under it. At the end of the year, I will pay my own PIT for my own self. So if you've withheld 5 million naira, I will now know what's at the end of the year, what it is. If I'm a business name, you know, like I'm still within that threshold, I've not exceeded it. I will not use it to offset my PIT tax liability. Does that answer your question? Maybe we should allow people to use audio. Maybe if you want to speak, you just raise your digital hand, then you speak, because I like to be conversational. I like people like this response. I like people to reply to say, oh, yes, I understand, or no, can you explain more? But this 15 million naira includes withholding tax. Am I charging VAT on the whole sum or deduct withholding tax before deducting charging VAT? This question is not questioning. No. When you say this 50 million naira includes withholding tax, how can it be? You are not the one that is, it's a contract. You say you are the one that have a contract. This person say, if I have a company, say we have turnover. When you say turnover, okay, revenue of 50 million naira, which is the total contract sum with withholding, with withholding to be deducted, on which sorry, Tayo Lola, can you use audio, please? Tayo Lola, please, can you speak out so I can answer your question correctly? Mr. Ige, is Mr. Ige still on this call? Please, I just want this to be very interactive as possible. If I answer the question, Tayo Lola, if you are still on the call, please, you can unmute yourself and ask clearly, please, so that I can answer you. So Timilen, you said VAT and withholding tax. I think I've answered. To access the comprehensive payee template. Okay. Timilen, you said withholding VAT and aligned is specific to ensure the business. Yes. So if you're still a small company, you cannot charge VAT. You know yourself. Some people will say, what if my revenue exceed that? Now, this is the first year of implementing this new tax act. So you know what your last year revenue is. Did you exceed 100 million? Please judge yourself by yourself, because a lot of people are saying, no, how do I know? What if I exceed? Okay, last year, did you exceed 100 million? If the answer is no, then you still fall with this small company. If you exceeded 100 million, then you are no longer a small company. Then you should know. So everybody knows. If you're making income now, I know how much I made last year. I should know, okay, if I'm within 100 million, like now, I know that, okay, I'm still within 100 million naira, so I'm not supposed to charge VAT. So everything you're doing, like, you know, as a company, you are not charging VAT and you're not supposed to charge. If they charge you, tell them that you're a small company. But if the company is a big company, so you must understand, because some people say, I don't know if you're a small company or big company, you're lying. No problem. Give me my withholding tax receipt and the VAT, you cannot offset it. So the system is actually balanced, but if you're charging, you're not supposed to charge, you can still use it to offset your tax at the end of the year. So, Tayo, please, if you're still here, you can unmute yourself. If you have a question, please use the digital and raise up your hand, and they will give you the platform to ask your question. So, Mr. Emeka, I don't know if I answered your question. Mr. Ige still on this call. I don't know if I answered this question, but I think I did. I think he has run away, Mr. Ige, because I noticed it immediately that this is just Mr. Yomide, you're still on this call. Please, did I answer your question? Please, let's make use of the tax box. Just say yes, or I need more clarification. You know, this is really an interactive session. So please, the mic is yours. Tayo, please, you can speak.
Hello. Good afternoon, everyone. Hello. Good afternoon.
Yes, I hear you.
Yes, can you hear me? I am Mama Tayo. Thank you, madam, for the insightful presentation. Quite amazing. So this is my question. This is my question. There's a contract for 50 million naira, including only withholding tax. The person awarding the contract is only liable to deduct withholding tax. But you know, in Nigeria, once you have a contract like that, definitely you're supposed to also think about how you calculate your value-added tax and remit to NRS. Now, my question is, we have a contract of 50 million naira, and there's going to be a withholding tax of, say, 5% on this amount. So let's say we have like 500,000 naira or 5 million naira to remit as withholding. Now, will I deduct that withholding tax from from the contract sum before charging value-added tax, or I will charge value-added tax on the whole sum of 50 million naira, knowing well that withholding tax is included in this 50 million naira.
Okay,
I don't know if
good
you got my question.
I get your question perfectly now. So your value-added
Okay.
tax, that
Thank you.
the VAT now that you are charging now this person. So you might remember now it's now a two-way thing. So this VAT now that you are including for this person, the receiver is bearing the VAT, but the payer is bearing the VAT, but you are bearing the withholding tax. So the person will charge withholding tax on 50 million naira, not on 53,750,000, because 7.5% of 50 million naira from what we calculated is 3,750,000 naira. So yes, you know that they will still be told 5%, which is 2.5 million naira. And the visitor, because now you are generating income, you are supposed to pay your tax. So that VAT, but remember you are charging that person 7.5. The person is only just charging you 5%. So that 7.5 now that you are charging that person now will now apply impute VAT on their own end. So you now, that withholding tax now that they've now, you pay your tax, you are doing a business, so you must pay your VAT. So that 5% now, that person is now withholding from you. You have to collect it. It's a tax credit. At the end of the year, you don't know what your tax liability is after, as a company, after you've deducted expenses, salaries, and every other expenses you've incurred in the process of running your business, because now transportation, advertising, a lot of things will have to come in place, and then you now have what you call your taxable profit. So from that taxable profit now, that is now where you now pay you now apply the 30% taxes on. So now if, let's say now at the end of the year, your profit is 10 million, your taxable profits, you've deducted your expenses and all of that, your taxable profit is 10 million naira. Now, the law now says you pay 30% of 10 million naira. Now, what is 30% of 10 million naira? That's 3 million naira. Mind you, you already have this withholding tax. Somebody has deducted, 2.5 billion naira. So instead of you now paying 3 million naira as your final tax liability, you now deduct the person you've already paid ahead. So withholding tax is like you've paid your tax ahead. So you now deduct 2.5 million naira that they've withheld from you, from that 3 million naira tax liability that you have. So you're now left with paying just 500,000 naira. Now, if you have more, of course, it cannot exceed what you pay. Let's say in a situation where it exceeds, you don't have to now pay tax that year. You now carry it forward to the next year. So in this case, now that 2.5 million, you now deduct it from what your annual CIT. So if you are supposed to pay maybe 30%, 3 million, you now pay 500,000 because you've now deducted 2.5 million that the person withheld from you. So you are now claiming it back. So it's like it's a tax credit. Are you clear now, Tayo? Hello, Tayo.
Yes, I'm with
Okay.
you.
My question is,
I quite understand that, but my question still is,
on what will I charge VAT? You are charging VAT on the amount. Sorry. You can mute yourself. You're charging VAT on 50 million. You're not charging VAT on withholding tax. You should understand the foundations of what withholding tax is and what VAT is. You're not charging VAT on withholding tax. No, you're charging VAT on the contract. Let's say I'm entering a contract with someone, and then I tell you, oh, I want to do this thing for you, and this thing for me to implement it for you is going to cost you 50 million naira. Fine, I give you my invoice. This is where invoicing comes in place. In that invoicing portal already, you just enter what the amount is, and then VAT 7.5, it will just be automatic. You just apply 7.5% on what that contract amount is, which is 50 million naira. You don't charge VAT on withholding tax. Withholding tax is a tax credit, is an income on. It's charged from source. So you're not charging VAT on withholding tax, you're charging VAT on the contract that you are actually dealing with. So the person will now charge you withholding tax on the contract amount. You are charging VAT on the contract amount, 7.5%. The person will now withhold 5% on the contract amount, not on the VAT amount. The same way you don't apply VAT to withholding tax, you also don't apply withholding tax to VAT. Okay. Please, any other question? I think that should be very, very clear, except if you have any question, if you have any confusion on that. I don't know, maybe, sorry, Mr. Ayomide Igia, did I answer your question? Mr. Emeka, are you still on this call? Did I answer your question? Does anyone
Yes,
else
I'm
have
okay.
a question?
I'm okay, Ms.
Sorry,
Joyce.
Joyce.
Thank you.
Thank you so much, Mr. Ayomide, for being on this call. Thank you.
Yes, I know. I'm happy to be here too.
That's my, I don't know how to, but I would like to say that's my boss. That's my boss. Thank you, Sha. It's nice seeing you here. Okay, so who else? Mr. Emeka, are you clear? I can see you're still on this call. I'm just trying to call out everyone that asked the question. Timilenyi, I think Timilenyi also asked the question. Okay, V Finance, you're raising your hands. Okay, please, V Finance, you can speak.
Hi, Joyce. So I just wanted to point to, what's her name again? Tayo Lola. Can you hear me? Can you hear me? Hello, can you all hear me?
Okay, somebody asked a question. Samuel Udo said, what is the time frame to migrate to the invoicing? Actually, the time frame to migrate to invoicing was actually since last year, November. Yes, from this Digitax person I conversed with earlier today, they said from actually large companies, a lot of big companies are already implementing this invoicing system. So they told them that the deadline was 1st of November. That now 1st of November has actually passed. So from definitely from 1st of January. So every company, every serious company, like most large companies, are already implementing this e-invoicing system. So that is one of the compliances under the new tax act now is you must digitize and modernize your invoicing system. So it's no longer manual invoicing. So it's already it's already in place already. So there's no time frame. If you've not implemented it already, you're late. You're late. So yes, Vivian, continue.
Hello, Joyce. Can you hear me?
I can hear you. Please, please.
Okay, great. So I just wanted to point to, what's her name again? Tayo Lola. I wanted to be sure she understood your explanation to her on her question. So I just wanted her to affirm if she understood, or she will need more explanation on that. Tayo, are you still on this call? Okay, I guess she's not in here. Tayo. Okay, I don't think she's here. So we can just continue. Continue, Joyce. Go on.
Okay, does any other person have any question? If not, I think, yeah, we said we're going to end. So are we clear? Please, I need to get a feedback from everyone. Please, what's your feedback like? Do you think we covered what you wanted us to cover? Is there, Kenneth, you have a question? Please go ahead and ask your question, sir.
Okay, I want to ask, what is the minimum requirement for you to be using the e-invoicing? What is the turnover threshold for you to be using the e-invoicing, or is it immediately exceed the 100?
As you're a business owner, as long as you're a business owner, as long as you have a business, there's no threshold. Like now, if you're claiming to be a small company, how do we know you're a small company? How does the NRS know you're a small company? So there's no threshold. As long as you're a registered business owner, you should use the e-invoicing system, because you have to send the invoice to your customers now. So there's no like, oh, until you reach 100 million before you start using, from day one, like I'm doing business, you're not supposed to be using manual invoice again. You're supposed to use the e-invoicing system. So everything is submitted to NRS. So if you're not compliant, if you're not digitized e-invoicing compliance, it's actually, a penalty for that. There's no time. I would have also shared a slide I have on that, on the penalties for those who are not actually digital compliant. There's actually a penalty for that. Yes, there's a penalty for that, because they want every business to actually be digitalized and to be compliant with the e-invoicing system. So that's one of the compliances and best practices. Now we'll begin to see more of it. People do not understand what it's all about. So people are seeing, payroll tax, band, progressive PIT, But now we're supposed to be talking about the e-invoicing, digitalization now. So there's no tax ban, there's no ban for it. As long as you're a business owner, you should have that in place. Yes. And if you have more question on that, let me just drop my email on the chat. You can always ask me an email, just go to 25@gmail.com. You can send me an email if you want to get more knowledge, on that. You can always send me an email, then I'll answer you on that digitalization, because there's a company that actually do that for companies, so you can actually reach out to them and then they implement it. For example, now Mr. Ayomide now he works at a very large establishment, so they should have the e-invoicing system in place already. If they don't, actually, because it's a federal institution, so that e-invoicing should be in place for companies, small, big, even if you're just sending. As long as you are issuing invoices to customers, everybody should issue invoices to customers. So you should have that digitalization, the invoicing system, and all of that. So yes, there's no threshold. Thank you. Okay. Any other question?
Sorry. The reason I was asking is the cost implication of the e-invoicing, the integration and other for company within the threshold of 100,000, the ERP and the cost implications. So largely, I thought for those that are under the small company threshold, they are exempt. I thought that they are exempt.
Okay, they are not exempted. See, this e-invoicing system, every other countries are doing it. Kenya, they have been doing it since like 3 years. In US, Canada, of course, that's the system. Even if you're a hairdresser, you have to have that. You're just making hair for people, and as long as you issue invoice, you have to issue it through the digital form, the IRS portal. There they call them Inland Revenue Service. So you have to use it through their portal and all of that. So, but Nigeria, we're just welcoming that, because we want to be able to capture the total revenue. Nigeria does not have a data system. We don't know the total revenue of the country. For me now, that's studying economics now. There's what we call, okay, when we just say, oh, this is GDP, like you're just giving GDP based on assumptions, because you don't even have the data to back up what you're even saying. This is the GDP, because now with this digitalization of invoice and all that, we can actually see how much is going in and out of the country. We can actually see, okay, this is not we cannot trace it. So if we say Nigeria GDP is $10 trillion, we're actually speaking from facts. We're speaking from data. So now every business should have it. So when you say small businesses, the cost of implementation, you have to offset it as the cost of running your business. You have to offset it from your as the cost of running your business. You don't pay taxes on it, because now it's part of the expenses of running your business. When you run your business, of course, you have to, put a lot of system in place. So the first year you might not, be profitable. Even if you are on a loss, you still have to offset your loss the following year. Let's say now, okay, to implement this is actually a lot. Yes, but if you really want to put structure into your business, Nigeria is trying to create a structure, and we're starting from our business, from our tax system. So now you have to now offset it, the whatever cost it costs you to implement this digitalization of your invoicing and all of that. You have to offset it against your income and all of that before you now determine if you run at a loss. You can offset your loss the next year. So it's not like, oh, after paying this much and all of that. So yes, so it does not matter. Even if it's a small business, you just have to implement it for it to be compliant. It's one of the compliance. Of course, when you're a small business, you have different ERP systems that you use. You don't say because you're a small business, you don't put all of that in place. Put all of it in place. Yes, Vivian, you have a question.
So, Joyce, just to add up to what, just to reiterate and to clarify, I think it's Mr. Kenneth on your question. So basically, the e-invoicing, the NRS had made it mandatory for all businesses, but for businesses that had implemented it, there was a bit of a loophole there, in the sense that only large businesses can now do e-invoicing for now. So small businesses and medium-sized businesses are kind of, would I say, limited or really not allowed for now to do e-invoicing, because we know Nigeria and our systems, like, we try to bring in things all from outside the country to see if we can implement it in Nigeria. But outside the country or out of the countries are more developed than what we have here in Nigeria. So the e-invoicing, that's the National E-invoicing and Electronic Fiscal System, the EFS, does not really work well for the small businesses and the medium-sized businesses. And that is why it is now mandated for the large businesses to make sure that they come on board with the e-invoicing. When I talk about large businesses, I talk about businesses with an annual turnover of about 5 billion or more. So if they are issuing invoices, they have to go through that system. But that does not stop the fact that small businesses and medium-sized businesses are not to go through the e-invoicing system. They are to go through, but currently, if you try to get adopt that e-invoicing, it would not work. It will not work because the way it is now structured is only for large businesses. But why the system is designed to expand over time, small businesses and small businesses and medium, very soon they will start coming on board. But right now, I think it is just the large businesses that can do this mandatory e-invoicing solely because of their broader business transactions and activities. I guess that clarifies it.
Okay, thank you for that clarification, Vivian. Because during the webinar we had with NRS, and that I think one of the facilitators was holding it. This was what they were emphasizing on digitalization of invoicing systems and all of that. But for large companies, they started putting it in place, and small companies too. Yes, the cost, small companies will catch up, but if you as a small company, you can implement it, fine. It's not like they are exempted, but it's something that they will look up to. Fine, they might not, they're not the ones at the forefront. Large companies like from 5 billion and above, yes, they're the ones that must have this in place and all of that. But even for before the year runs out, like we just still get small businesses. So everyone is actually, as long as you operate a business in Nigeria, but that is like, but thanks for the clarification. That is like it is, yes. Yeah, of course, they always start with large taxpayers, then they proceed down to medium and small businesses. So, okay. Is there another question? If there's no question, can wrap it up. For me, I actually enjoyed this training. I don't know for okay, someone is saying, someone asked a question. To be clear, Ma, are you saying tax filing is more on cash base, not accrual? Yes. Yes, it's more on cash base, not accrual. Come on, how do you pay? How do you file VAT? You know, you don't pay VAT on. You an accountant cannot answer this question, because now, if you are filing your VAT for money that you've not yet received, make it make sense. Are you still going to receive the money? What if the person doesn't pay you again? So there's enough taxes on your head already. So why are you paying tax for something you've not received? So it's based on cash basis, not accrual. And thank you. So you pay your VAT and you do your VAT filing, like, okay, for this month, this is it, and then you file your VAT based on what you've received. You're already charging VAT on those sales. Like, for example, now, like I was discussing now, oh, I've charged VAT on this and all of that. But if you're a small business, it's actually new for you because you're not charging VAT. So what are you now filing? So it's actually new. You don't have any money to pay. But if as a business owner, because a lot of people, they charge VAT, but they don't file it. So if as you have collected that VAT, like this person that was giving the 50 million illustration, I've charged the VAT of 7.5 million. So it's not like maybe it's a new money that I'm even paying. All those income now that I was supposed to get, I've already included the VAT in it. So I'm basically just paying for what I've charged people already. So how do you now pay for what you've not received? So that's why I gave an illustration and said, if you've given the invoice and they've not yet paid your money, you cannot file VAT on that. You cannot pay your VAT on that. So yeah, that is. So that's that on that. So are we clear? Is there any other questions? If you have any question concerning anything, if it's on the payroll template, if it's on anything, please just feel free to ask. It's as long as you're still on this call, it shows you really want to get the most of this training. So please ask. You can use your can mute yourself, or you can
I think
You
the
can use the
question. Hello, can you hear me, ma?
Yes.
So, because of our limited time, I'm not sure there is any other question.
Okay, for those that want the pay, if you want the payroll template, please indicate. Like we said, I have the one that I can give you guys. You can use that. Maybe your company does not pay NHF, NHIS benefits in kind and on tax benefits in kind. So we can always send that to you. Can you indicate here so that we can know if you want that, but if you don't want that, it's still okay. Is there anyone here that would want? We have the one for free. I can give you guys, but the other one that is so detailed that you can, that includes the NHF, NHIS benefits in kind. That is just for a token. So okay, fine. So I think they already let you know how you can just send a mail to vfinance.ng and just let her know that you want that free one, and then you get the free template. So just 1% confidence. Okay, that's fine. So any other question, any contribution? So thank you very much, everyone. Thank you for having me. So Vivian, the floor is yours.
All right, thank you so much, Ms. Joy Obiaku. Such an interactive and educative section. So can we give her an applause, an appreciation using our emoji? Can we appreciate her? I'm very sure that she has done a lot of clarification for us, ranges from the changes in the tax provision to the new payee template. Wow, thank you so much, Ms. Joyce. All right, so for every one of us that are on this call, I'm very sure we registered, and so the free template will be shared to us in our respective email. So for every one of us on this call, be sure that we have your email, and we are going to send the free template to you. Why? For everyone that wants an access to the paid template, it's just for a token of 15K. Just by talking of 15K, trust me, the template is worth more than the value. So it's just like an heart of free service to us, an act of benevolence to us. So if you want the paid version, you can reach out to VFinance via our email, and you can also reach out to Vivian via the number in the chat box. All right, we come to the end of today's section. How many? I don't know if there is anyone on this call. Can you hear me? If you still have any further questions, you can reach out to Ms. Joy. Her email is in the chat box. Kindly reach out to her. You can also reach out to us, and you can also follow us on our LinkedIn to know more whenever we have any other webinar and training. Thank you so much for staying up to this time. We appreciate your time. We appreciate you for your patience, and we hope to bring more valuable webinar and training to you guys. Thank you so much. Vivian, do you have any other thing to say?
Okay, thank you very much, everyone. Nothing much to say. All has been said. So remember, the session is recorded, so you all get the recording of this session along with the free template. But if you want to do Oliver Twist, if you need more, you can opt for the 15,000 Naira template as well, and you know where to send your messages or your requests to my email, VFinance email, or to my WhatsApp number. So thank you so much for joining this call. We hope to see you join more and more trainings, be it paid or free. Please, if you need clarity on anything at all, feel free to reach out to Madam Joyce, feel free to reach out to me, feel free to reach out to Juliana. We are all ready to take up your questions at any given point in time. And kudos to those who joined our financial statement preparation for last 2 months ago and are on this call for another training. Thank you for your consistency. Thank you for believing in VFinance Management Services. And we want to continue to render quality service to you all. You know, the goal for us is to bridge the gap between, you know, the theory and the practical ways of finance. So we do not just know the theory aspect, but we'll be able to practicalize it in our everyday activities, both at work and our career, as the case may be. So that being said, thank you very much for having us. We are grateful that you find it worthy to allow us to take you on this journey in this space of tax compliance. We hope to see you soon and see you in many of our trainings coming up, like I said, be it paid or free. Thank you so much, and do have a lovely day. Enjoy the rest of your day. Bye.